Hey, in this video, I am going to walk you through how to fill out the SBA Personal Financial Statement, also known as the SBA Form 413. So this form is probably one of the most important forms in your SBA loan application. It is your personal financial statement. So this is helping the SBA understand your personal financial situation, not just your business. So yes, your business plan, your projections, your past historical financial results, if you're an existing business, those are all going to be really important. But especially for startups or early stage businesses, your personal financial statement is going to be critical. And so I am going to walk you through, because this form can get a little bit tricky. You know, it's a government form. There's some language in here that doesn't always make the most sense. And during my time as an SBA microlender, I spent over a decade as the executive director of an SBA microlender. And we saw folks make mistakes on this personal financial statement all the time. And a mistake on this can really jeopardize your ability to get approved, because we're taking this information and we're assuming that it's correct. If we see something that is obviously wrong, it's going to make us suspect. As a lender, we're suspect now about all the information you're giving us. So that's always a bad sign if we see the PFS is filled out incorrectly, or if it looks like it's incorrect or incomplete. That's always kind of a first bad taste in your mouth, right? But if you don't put certain assets or don't put certain liabilities on there or don't fill it out correctly, that can really either cause you to not get approved when you really are a lot more creditworthy than realize, or it can actually be, if you fill it out incorrectly and the lender makes a loan decision assuming the information you put in this document is correct, and then it turns out that you didn't fill it out correctly. I'm guessing probably down here at the bottom it's going to say something like, you know, you're saying that this is correct to the best of your knowledge, and you know, you could get in trouble. Yeah, like, so let's see, notice to applicants, criminal penalties for false statements, right? So 10 years in prison, $500,000. So I think that's if you are purposely making a false statement, but nevertheless, it's important to try to get this document absolutely accurate. And so I'm going to walk you through how to fill out the details of this template. All right, so the first thing you need to know is just selecting which loan program you are applying for. Now, this already might be confusing because you might be applying for an SBA loan and none of these options say SBA loan. They say 7A loan, 504 loan, surety bond. It doesn't even say SBA loan. Well, this right here, if you are applying for a 7A loan, or if you are applying for an SBA loan, I should say, it's probably either a 7A or a 504 loan. So those are the different types of SBA loans where you might need to fill this out. So right off the bat, kind of confusing. But if you're applying for an SBA loan, this is what you want to check. These other programs, I would say, are less popular, so I'm not going to focus our attention on those right now. Okay, this first section, pretty straightforward. Name, contact information. That's pretty straightforward. Whether the business is a LLC or S Corp, that's pretty straightforward. All right, let's get into the meat of this, is really your assets and your liabilities. That is kind of your personal balance sheet, right? And so here, what they want to know is the value of the cash that you have held in your bank accounts. Right, so these are your checking accounts, and this should really only be your personal checking account. So sometimes you would see people combining their business checking account and their personal checking account, putting both amounts in here. That's not what we want here. We want you to put in your personal checking account amounts here, because we're going to look at the business balance sheet. If there is a business balance sheet, we're going to look at that and we don't want to double count. Okay, so this should only be personal. Same thing with savings account. Values, the value of your IRA, this is a type of retirement account. And then this accounts and notes receivable. So this would be if somebody owes you something personally. So you have like a loan, say you made a loan to your family member for $10,000 and they're going to pay you back. They owe you $10,000. You could put that in here. Your life insurance, this is the cash surrender value only. So what that means, if you have term life insurance, that means you're just paying for that, but you're not. If you decide to stop the policy, you can't cash. There's nothing you can cash out. If you have a whole life policy, that's where you typically might have a cash surrender value, and so there would be. You can ask your insurance agent if you're not sure. If you aren't sure, my recommendation would be to be more conservative. So if you're not sure what it is, I would put 0 rather than, for example, sometimes you would see someone would have a $500,000 life insurance policy, but it's a term policy, and they put $500,000 right here. That's not the cash surrender value. That's the value if you die, right? So that's not what they're looking for here. They're looking for, if you stop the policy, if you close out the policy, what would you get paid in cash for that? This would be stock and bond accounts or investment accounts other than retirement accounts. Real estate, so this is where you want to put the value of your house, for example. So I would say go to Zillow, get a estimate of your house. That's probably the safest thing you could do, to just put in a reasonable number there. Automobiles, I would put in at the most, I would put in what you paid for the vehicles, but you could probably, depreciate that or put in a lower value of what you think you could actually sell that vehicle for today. That's probably what they really want you to do, is put in, what do you think you could sell this vehicle for? Then we've got other personal property here. So this is just, let's say you have some jewelry or something that has a lot of value. That could be what you would put in this field. And then any other assets. All right, accounts payable. This could be like a credit card payable. So if you've got a credit card balance and you owe, $6,000 on a credit card, that would be a good example of what to put in this field. Notes payable. So they just use strange language, but notes payable to banks and others. This is a loan. So if you got a personal loan, and this would be a personal loan and different than like an auto loan or a mortgage, because we've got mortgages on real estate down here, and we have installment loans on auto here. And then this is installment account other. A common thing you might see here could be a student loan. You could probably put a student loan in the notes payable to banks and others, or in this installment accounts section here. Loans against life insurance. So you might have, if we come over here, we have this life insurance with a cash surrender value. You might actually be able to take a loan out against that. And so, if you do have that, you should know the balance of that and put that in here. Unpaid taxes. Okay, you definitely want to put in the correct value of your unpaid taxes, but hopefully you don't have unpaid taxes, because if you're looking for an SBA loan, that's going to be a major stumbling block or a hurdle for you. If you have unpaid taxes, it's hard to get an SBA loan, if not impossible. It's technically not impossible, but it's going to be tough. Other liabilities. So this is just other debts that you owe. So if you owe, instead of your family member owing you something, if you owe your family member a certain dollar amount, that's what you'd want to put in here. And then your total liabilities is this should automatically add up based on everything you input here. And your net worth is going to be your assets minus your liabilities. And the hope would be that that's a positive number, but it's not always. It may not be a positive number. Now, some mistakes that we often would see is people would put like the value of their mortgage here, but not put the value of the house over here. So they should have the asset and the liability, or sometimes they'd put the value of the house, but they wouldn't put the value of the mortgage. So make sure you're doing those, kind of both sides of that equation there. Okay, so that is that key section, probably the most important section. Next, they're going to want to know your salary, if you have outside income. Or if you're paid a salary from the business, you could put that in here if it is truly a salary. Net investment income, this is just like dividends or interest income that you're earning from your investments. Real estate income, so let's say you have a rental property that you own personally and you're renting that out, you could have some rent or real estate income here. And I think what I would recommend here is on the real estate income, you should put your net income on that. So like, let's say you have a house a rental property and you rent that out for $1,000 a month, but you have expenses of $500 a month. I would probably put the $500 a month here. I think that's what I would recommend. Again, that's probably more conservative because I think it could be misleading if you put the full $1,000 a month in rental income, but you have no place over here to really show, well, yeah, but I also have $500 a month in expenses on this rental property. So I would probably put the net amount there. The other thing that is not super clear, even as I'm talking about this, it's not super clear what are they looking for, a monthly amount or a annual amount. I would probably put an annual amount, but it is not super clear. And so that's why this form can be confusing. So my recommendation, I think the way I would tend to like to see it as a lender would be an annual amount. All right. Contingent liabilities as endorser or co-maker. So again, these are kind of confusing, but let's say you have a child and you co-signed on their car loan or you co-signed on their student loan. That's what they're looking for here. So somewhere where you are a co-signer on a loan for somebody else's loan, that's what they want there. Legal claims and judgments. So if you have a judgment against you for some reason or something that you are legally required to pay, you'd want to put that in here. Provision for federal income tax, so just any federal income tax that you owe or other special debt. So that's just kind of the catch-all for anything else you might owe somebody that we haven't already thought of. Okay. And then here, this description of other income. So when you have this other income box, you can just describe this. It gives you some examples. Could be like alimony, child support payments. This says it should not be disclosed in other income unless it is desired to have such payments counted towards total income. So again, a little bit confusing. It's not 100% clear what they want you to do there. Do they not want you to include it, or are you required to include it? Not 100% clear. So again, my kind of rule of thumb would be the lender is going to try to make a lending decision on this. So the safe thing for you to do is, if you're not sure, take the more conservative approach in what you put in here, and that's going to kind of keep you on the up and up here, I think. And so I would, if you have a material thing that you are not sure whether you should count it or not, or how you should display it, ask your lender how they want you to display it. That's what my recommendation would be. All right, so here, this is loans that you owe to banks and others. So here's where they're going to ask for all your student loans, for example. Put your student loans in here, the original balance, the current balance. So you got a lot of work to go pull all this information from different statements and that sort of thing. They want to know whether it is secured or endorsed or type of collateral. So, if it's a student loan, for example, has no collateral probably, right? But a mortgage the collateral would be your home. It's secured with your home. And so, again, here, I guess in this notes payable section, we're not really looking at a mortgage because that's going to come down here below. But that's an example. If the loan has some collateral tied to it, that's what you'd want to put in here. Stocks and bonds. So it says use attachments if necessary. So you can actually, pull like your statements, your monthly statements from retirement accounts or something like that. They want you to have each attachment must be identified as part of the statement and signed. So there's kind of a lot of work here. I don't know. I mean, it says use attachments if necessary. So I guess if you have, yeah, I guess if you have more than 4 different types of securities, you're going to have to use attachments to really give them everything that they might want. And so, yeah, again, a lot of work here to really get this. If you have a pretty robust personal financial statement with lots of different assets, and this is going to take some time and take some work. But so this would be like the number of shares of the stock. This would be or a bond, and then the name of the security is like the name of the bond. So if you own Apple shares, you'd want to put, Apple stock here. You can put the cost that you paid for it. So the cost here is what they want to know, what your cost basis is, how much you originally pay for it, and then what is the current market value of that, and then the date of that quotation or exchange. So again, this is just confusing, but I think what they're looking for is you're going to put in a market value here. You're going to say it's worth $100 a share, and they want to know as of what date. So it's $100 a share as of, today's date. And then you're going to put your total value for that particular stock or bond. So again, I think, if you have a lot of investments, I guess probably pulling those statements together is going to probably be the most useful way or most time efficient way to do that. All right, real estate owned. So now here's where you can put your home. If you had a rental property or second property, or a vacation home, something like that, you could put up to 3 homes in the kind of standard model here, and they're going to ask for what type of residence it is. I think all of this is pretty straightforward. Amount of payment per month/year. So again, this is a confusing thing where it's like, what do they want? Do they want the annual or do they want the monthly? I would put the monthly number here if it were me. And then the status of the mortgage, that just means, are you current? Are you on time? Are you behind? So you'd want to put, current if you're fully up to speed on that. If you're behind, usually that's like 30 days late, 60 days late. So that'd be the kind of thing that they'd want to know. All right, other personal property. So you're going to describe any other personal property, and if it is pledged as a security, you got to state the name, the address of the lien holder, amount of the lien, terms and payment if delinquent, describe delinquency. So again, a lot of additional detail that they're going to be asking for you to write a summary here. The unpaid taxes, again, hopefully this isn't something you're dealing with while you're applying for an SBA loan, but if so, then this is probably going to be really important to provide specific detail about how far behind you are, and to who, and whether you're on a payment plan or not. So that's a key thing. So sometimes you can negotiate. If you get behind, you can negotiate with the taxing agency and get on an approved payment plan to try to catch up. Now, if you're on an approved payment plan and you're current with like income tax, federal income tax, for example, there are, I believe, SBA 7A and 504 loans you're still going to be eligible for. I know as a microlender, we're at SBA microlender, you were technically eligible as long as you were on a payment plan. Now, I will say that even though you might technically be eligible, the reason I'm not really sure is because it is almost always just a, sorry, we can't help. It's just really tough. If you fall behind on taxes, it's going to be tough to get approved for a government guaranteed loan when you're behind on taxes to that same government. So that is a challenge for sure. Other liabilities, just describing your other debts here. And then life insurance held. Again, here now they're saying something a little bit different. They want you to give the face amount and cash surrender value of the policy. So the face amount is basically what the value if you were to pass away. So if you had a $500,000 policy and you passed away and your beneficiaries got $500,000, that's what they're looking for face amount. Now, a cash surrender value is if you close the policy today, you may have paid in $50,000 into the policy over a long period of time, and it may still be worth you. Maybe you'd be able to withdraw $25,000 of that as a cash surrender value still. So that's what they're looking for here. They actually want the name of the insurance company and beneficiaries as well. Okay, so that is the document. There is a lot here. I would recommend, again, being conservative with this. If you have questions, ask your lender. They're going to be happy to try to answer questions for you. Now, there's one other thing that I want to point out, and this is common from SBA lenders, that they'll say, you can fill this out and it's not a one time and done. It's not like you only have one chance. So if you fill it out and then you have a conversation with the lender, you realize, okay, maybe I didn't fill this out quite correctly, you're going to have another chance to resolve that, to fix that, update that. So again, I don't think you need to stress too much, but I would also proceed with caution because it is a federal government form with these scary statements down here. So I hope that's been helpful. Feel free to, if you have questions, feel free to reach out at support@projectionhub.com. We'd be happy to try to answer questions for you about this. And yeah, I guess just a little final plug here. My background is in SBA lending, but today I focus my time at ProjectionHub, my company ProjectionHub, where we help a lot of SBA loan applicants and other small businesses create financial projections for their loan applications or for potential investors. And so if you find yourself working on an SBA loan application and your lender asks for a set of projections, we'd love to help you with that. So you can find our website down in the description of the video below, and we'd love for you to come and check it out. And then finally, if you found this content to be helpful, I'd love it if you gave us a thumbs up on the video and subscribe to our channel to just let other folks in the algorithm know that we're producing good content. So, all right, that is all I have for you. Thanks.